Welcome to Market Sentiment. We saw how emotions can disrupt your trading plans, but thousands of traders experience the same emotional swings. When those emotions ripple through the crowd, they create powerful market sentiment. In this lesson, we'll learn how to read market sentiment before it moves the price. Market sentiment is the overall mood or attitude of traders and investors. It's how people feel about where the market is headed, bullish or bearish, hopeful or afraid. Sentiment isn't found in earnings reports or indicators. It's a belief. Traders act on what they think will happen, not always on facts. That gap creates opportunity and risk. Sometimes the price goes up even with bad news, or down despite good news. Why? Because what traders expected didn't match what actually happened. By the time you hear the news, the market may have already reacted. Sentiment often changes faster than fundamentals. A bullish crowd drives price up, not always rationally. Then fear takes over and a panic sell begins. This emotional cycle repeats across markets. Markets behave like crowds. When others panic, you panic. When others chase, you chase. Awareness helps you step back and stay logical. Herd mentality is when people follow others without thinking independently. It leads to bubbles, crashes, and irrational moves. Sentiment builds slowly and then spills over. This is how trends start. One belief spreads, others join, and price accelerates. Smart traders often go against extreme sentiment. If everyone's bullish, a reversal may be near. Extreme sentiment can mean a top or bottom. Sentiment indicators reveal how traders feel about the market, not where price is now. Tools like the Fear and Greed Index or the put-to-call ratio help you gauge crowd emotion. We'll explore how each works and how to apply them in your trading soon. Sentiment helps you understand when markets are overheated or overly fearful. This adds context to price action and helps you avoid traps. The same can happen on the other side. When the market drops sharply, fear dominates. Traders rush to sell, often near the bottom, just before price rebounds. This is a bear trap. Sentiment turns overly bearish while the market quietly reverses. Knowledge check. Spot the trap. Read each scenario and match it to the correct type. Use sentiment to spot traps and price action to confirm. For example, if sentiment is greedy but price stalls, watch for a reversal. Ride the trend while sentiment builds, but when emotion reaches extremes, be ready to exit or flip. Balance logic with awareness. To summarize, sentiment shows emotion, not logic. Crowds create trends but also traps. Watch for extremes. They often signal turning points. Combine sentiment with strategy for deeper insight. Time for a quick quiz. Price is surging. The news is euphoric. Everyone's calling it the start of a new bull market. What's the best course of action here? Chase it?
Yes, you're right.
Smart choice. Waiting for confirmation protects you from jumping into a potential bull trap. Look for structure and volume before acting. Now that you understand how market sentiment shapes trader behavior, it's time to dive deeper. In the next lesson, you'll explore real tools that help measure sentiment so you can read the mood of the market before it moves. Tools that reveal trader sentiment. Understanding trader emotion is crucial, but how do we measure it? In this lesson, you'll learn the most popular tools that help decode market sentiment. Sentiment tools give you insight into how other traders are feeling. They won't predict direction alone, but they show emotional extremes, helping you spot when the crowd might be wrong. One of the most trusted tools for spotting this crowd behavior is the COT report. COT stands for Commitments of Traders. It's a weekly report published by the U.S. Commodity Futures Trading Commission. The report shows how major trader groups, commercials, speculators, and small traders are positioned in the futures market. It offers a transparent look at who's buying and selling. The COT report is like reading the mood of the market's most influential players. It shows if the smart money is preparing for a turn, even if retail sentiment is still caught in the trend. This positioning mismatch often hints at reversals before they happen. Look at how each group is positioned. When large speculators are extremely long, bullish, the asset may be overbought. This is a potential warning. If those traders are already maxed out, where will additional buying come from? The price may struggle to move higher. Commercials typically hedge real-world exposure, not chase trends. When prices fall and commercials start buying, it often indicates a market bottom. They're using declining prices to hedge or inventory, hinting at potential support. Lastly, retail traders tend to follow late-stage trends. When retail sentiment is extremely bullish, it often marks sentiment tops, a contrarian sign that a reversal may be near. Time for a quick quiz. Different groups in the COT report behave in different ways. Which trader group behavior could signal a possible market reversal? When large speculators are increasing long positions in an uptrend. When commercials start buying as the price drops. When retail traders are cautiously bearish during a price decline.
No, the correct answer was
when commercials start buying as the price drops. Not quite. Large speculators and retail traders usually follow the trend, but commercials tend to position ahead of reversals. In short, price rises while commercials sell and speculators get long. It suggests a strong, healthy trend. Conversely, if commercials start buying into a dip, it may signal a turning point. COT is especially relevant for swing or position trades. It's a long-term view of sentiment, not suited for intraday moves. While COT helps you understand long-term positioning, short-term emotions need a different tool. Remember the Fear and Greed Index we mentioned earlier? Let's revisit it now. The Fear and Greed Index is a technical indicator that uses price patterns and volume only.
Yes, you're right.
It's a sentiment indicator, not purely technical. It includes market volatility, momentum, safe haven demand, and other emotional factors, not just price and volume. The Fear and Greed Index reflects overall market emotion on a scale from 0 to 100. Understanding each level helps you decide how to act. 0 to 25. Extreme fear. Traders are panic selling. This may present buying opportunities if supported by strong technical setups. 25 to 50. Fear. Caution dominates. Stay selective and look for signs of stabilization before entering a trade. 50. Neutral. Emotions are balanced. Rely fully on your trading strategy and setups. 50 to 75. Greed. Optimism rises. Be cautious with new entries and stick closely to your risk management rules. 75 to 100. Extreme greed. Euphoria rules the market. Avoid chasing. Watch for reversal signals or wait for pullbacks. Time for a quick quiz. The Fear and Greed Index reads 85. Markets are surging and traders online are hyped about can't-miss opportunities. You are planning a long entry this week. How should you respond in this situation? Step back, reassess risk, and wait for confirmation. Ignore sentiment and double your position. Enter the trade immediately before it's too late.
Yes, you're right.
Smart move. In extreme greed, it's best to be cautious and wait for confirmation before entering a trade. Don't forget that no tool works alone. Combine them. If the Fear and Greed Index reads greed and social sentiment is euphoric, be cautious. If COT shows hedgers buying, take note. Great job! You've learned how sentiment tools reveal the crowd's emotions and help you avoid traps. Next, we'll shift from market insights to execution, learning how to use trading platforms, place orders, and manage trades effectively. Time to explore trading platforms. Now that you understand market sentiment, it's time to execute with confidence. In this lesson, you'll explore trading platforms, order types, and how to manage trades using MT4 and TradingView. Your trading platform is your control center. It's where you analyze charts, place orders, manage risk, and monitor trades in real time. Knowing how to use it well gives you an edge. Before we dive into trading platforms, let's quickly review trade types. There are two core ways to enter a trade. Market order instantly buys/sells at the current price. Pending order executes when the price reaches your set level. Each serves a different purpose depending on your plan. A stop loss limits your loss. A take profit locks in gains. Together they protect your trades and remove emotion. Now that you understand how orders and risk tools work, let's see how to apply them in action. We'll start with MetaTrader 4, MT4, one of the most widely used trading platforms for Forex and CFDs. Let's break down the key parts of the MT4 interface. We'll start with the Market Watch panel. It shows a list of all available trading instruments, Forex pairs, indices, commodities, and more. Right-click to open charts, place orders, or view spreads. The chart window is where your technical analysis happens. You can add indicators, draw trend lines, switch time frames, and monitor price action in real time. Charts can be viewed as candlesticks, bars, or lines. The terminal at the bottom tracks your trades, balance, equity, profit, loss, and news. You can manage open positions, modify stop-loss chart, take profit, or close trades directly from here. It's your command center for trade management. The navigator gives quick access to your accounts, indicators, expert advisors, EAs, and scripts. This is where you can drag tools onto charts or switch between trading accounts. To place a trade in MT4, right-click a symbol in Market Watch and choose New Order. A trade window will appear where you can set your lot size, order type, stop loss, and take profit. Then click Buy or Sell. Modifying trades is simple. In the terminal, right-click your open position and select Modify. You can update your stop loss, take profit, or close part of the trade. MT4 lets you customize your charts, change colors, save templates, and set alerts. Custom layouts make your strategy easier to follow. You can also add indicators to your charts from the navigator. Just drag and drop them. Popular ones include RSI, MACD, and moving averages. Quick task. Steps to place a trade in MT4. Drag the actions into the correct order to place a basic trade in MetaTrader 4. Now that you understand MT4 basics, let's look at another platform used by traders around the world, TradingView. It's web-based and known for its clean interface and powerful charting tools. TradingView's layout is simple. On the left, you'll find drawing tools like trend lines, rectangles, text, and Fibonacci tools. On the top, you'll see controls for changing time frames, adding indicators, and switching chart types. To buy or sell, connect your broker to TradingView. Once linked, you'll see a Buy and Sell button on the chart or trading panel. Choose your order type, set your quantity, and confirm. Always define your stop loss and take profit before clicking Confirm. TradingView supports live trading if you connect your broker account.
Yes, you're right.
That's true. You can place real trades directly on the chart after linking your broker. Trading platforms are your execution tools. MT4 is robust and broker-linked. TradingView is perfect for analysis and sharing. Use both depending on your goals and workflow. You've now learned how to navigate MT4 and TradingView, where to find tools, place orders, and manage trades. Up next, we'll practice what you've learned in a short quiz.
What does market sentiment represent? The overall mood or belief of traders about future price movement. The exact future price based on fundamentals. The latest news from central banks. A. Companies' earnings and dividend reports. Why might prices rise even after bad news? Because bad news creates bullish momentum. Because technical indicators always lead to rallies. Because the news was already priced in or traders expected worse. Because fundamentals were ignored completely. What is a bull trap? A. Bearish pattern that leads to new lows. A. Price spike followed by a sharp drop, trapping optimistic buyers. A. Reversal that happens after RSI goes below 30. A. Steady upward trend with good fundamentals. What tool reveals how major trader groups are positioned in futures markets? The commitments of traders. COT report. Moving average convergence data. MACD. The risk sentiment oscillator. The Fibonacci position index. When commercials start buying as prices fall, what might it suggest? Weakness from institutional traders. An upcoming earnings season. A potential market bottom or reversal. A new uptrend already confirmed. 2. What does a fear and greed index reading of 85 usually signal? That fundamentals have no value in current conditions. The market is in a state of extreme greed and may reverse soon. Retail traders are selling in panic. A strong long-term uptrend with zero risk. 3. Why are retail traders considered a contrarian signal at times? Because they usually control the majority of trading volume. Because they short markets during rallies. Because they have access to insider data. Because they often join trends too late, near tops or bottoms. 4. What is the main value of sentiment indicators like the Fear and Greed Index? They help spot emotional extremes and potential reversals. They show which stocks have strong earnings. They tell you the exact price to enter. They are more accurate than technical analysis. 5 in a row. When should you use a stop loss in trading platforms like MT4 or TradingView? Only during high volatility news events. Only after a trade goes against you. Before entering a trade. To control potential losses. When you're unsure about market direction. Amazing. 6. What's the first step to placing a trade in MT4? Wait for news confirmation. Open new order from Market Watch. Draw trend lines and add an RSI. Place a pending order using Fibonacci.